We all survived 2025. What are our picks for 2026? First trading day of the year. We'll cover those. We got a little bit of tariff news. We'll talk about that regarding furniture. We have a fantastic guest coming on. Everyone loves CC Legator. He's going to talk about some setups for January, what he's looking at for the year, and how to approach these markets from the option markets. Full crew here. Let's get pre-market prep started right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, folks. We close by the dippers just like they were in 2025. We're way off the pre-market lows, up 39 handles, 69 to 31.50. We have the buck in the green by 13 cents. TLT, that's up only 41 cents, 87.57. USO flat at 69.06. GLD picking up where it left off last year, up 630, 403.29. SLV up almost twice as much on a percentage basis. That's up 275 at 67.20. And Bitcoin itching its away from that major support, up 2.45%, $2,155 at 90,040. TradeStation, that's right, folks. Chart, analyze, customize, all in one platform. We're all going to get to use this TradeStation platform better with the two charts. Let's bring on Triple D, and here we are, another year, 2026.
Yeah, here we go. Let's start the year with a bang. The market is starting with a bang here, Joel. They came in with their buying shoes on last night. Futures go up at 6 p.m. Robinhood, IBKR, all your overnight sessions open at 8, and they started buying stocks. And they haven't stopped buying stocks all night. Now, the question is, does that continue? Well, that's still to be determined, and we're going to find out, obviously, as this day goes on. But right now, a decent start to the day. Now, just recapping the action from Wednesday, we have that right. It kind of feels like a Monday, but no, this is actually a Friday. It's a weird week. You get a day off, then you get a day work a day, and then you get 2 days off. But if you go and look at the S&P action from Friday, significant selling in the last few hours. 686 to 681.5 on the SPY. That loses 40 handles. What I think a little bit of that is, and again, we've been talking about this, tax loss selling. You could actually, so USA works on trade date. Canada and many other countries work on settlement date. With 1 day settlement, you could have had a lot of people in a lot of other countries realizing tax losses on the last day of the year because they wouldn't settle until 2026. So I think you could have seen a little bit of that profit taking. You know, maybe some tax loss selling, but also profit taking as well, which is why the market maybe sold off in the last few hours. Now, we get the snapback rally here this morning. So the setup actually is very interesting here because, significant sell-off. We get it all back, the entire 40-point sell-off that we sold off in the last 2 hours on Wednesday, coming back here this morning. So it actually sets up pretty decent from the short side. Now, overall this year, we're going to reveal our 2026 trading acronyms in about 10, 12 minutes. But overall this year, I'm still bullish. We've got this layout where we've got the Fed going to maybe not cut rates in the first part because Powell might play it tough. But we know whoever comes in as the next Fed chairman is going to be a dove, and we're going to see interest rates significantly lower by the end of 2026. Overall, that is good for stocks. Hard to be bearish. We've also seen a broadening out of the rally. We've seen value stocks really pick it up the last couple months. That's good news as well. So there's lots of reasons in AI. We're still going to see lots more happening there, lots of innovation. There's lots of reasons to be bullish for 2026. That doesn't mean it has to be done in January here, though. So I'm kind of leaning a little bit to fading this rally from a trading perspective, but still looking at dips to buy stocks in my longer term account because I think 2026 is going to be a pretty good year.
All right. I like the scenario that you put in there about the whole year, right? Because we saw a lot of action, right? We saw a lot of action January through April. We had the April turn and then, the market going into the end of the year. So I'm going to incorporate that a little bit into my acronym too. But do we want to? Is there any news that we want to get to? Any immediate news before we?
Yeah, and there is headlines. So let's just lay it all out. Is today Friday, very quiet day for the market. Still holiday trade, even the first day of the year. You're seeing the nice bounce back, but expect volumes to be a bit lighter. A lot of traders took this whole week off, and they're going to come back on Monday. Analysts, very quiet. There's not really very many upgrades to talk at all. I know Barclays upgraded VRT. That was one of note, but there's not really much analyst action. Monday and Tuesday are usually two of the biggest analyst action days of the year. The first Monday in the year. Why is that? Because analysts are back at their desk and they want to get their 2026 picks out there. So I would expect a lot of upgrades and downgrades on Monday and Tuesday of next week. So get ready because upgrades and downgrades are coming. But today, pretty slow news day. We'll have lots of news. I wouldn't even be surprised if we see a merger or two early in January because it Corp's talking and stuff and getting excited here, and we've come out of the holiday trade. So we'll get lots of headlines coming. Earnings season will come middle of January. That'll start us too. So don't worry, you headline traders. Headlines are coming. But short term today, there's not a lot. I do want to mention Brentster. Bring Brentster in here because he probably has this headline here. We're talking the tariffs, trade.
Good morning.
Again. There was, and Brentster, you are, I can't hear you. Brent.
Really?
Oh, no, I hear you now. Sorry.
Okay. Sweet. I was just quiet.
Oh,
Happy New Year, everyone.
Happy New Year,
2026.
Brentster. Yeah, Happy New Year, everybody.
Oh.
2026. Awesome to be here. Right with you guys again. This is like our 10th, 11th, 12th season. I don't even know how many years we've been doing this show, Joel. Actually, I think it's entering our 13th season because we started in 20.
But this is the real year. This is the real year.
This is the year.
This is the year. No BS this year, man. We're getting off. We had a little bump at the end of last year. Started some figuring things out, and then by March and April, you guys are not going to know what to do by the end.
With all the information that we're going to bring you.
Man,
just information overload. Well, we'll try to simplify for you as we always do. Brentster, there is a headline this morning that's moving a couple of stocks. It's a tariff headline.
Yes.
And it's a delay. It's a little bit of a taco trade here again.
So when was this first headline? The delay here is for upholstery and cabinet tariffs, which we heard about. Was it like September?
It's when RH got hammered.
So we have a nice little watch list here, and Joel is drawing on his chart. I will show that here. Taco. So a little bit of a watch list for y'all. The ones that we were looking at last time that we heard this tariff was going to be put on was negative for RH, especially for Wayfair, ticker W, especially, and for Williams-Sonoma, ticker WSM, especially. There were a few American-based companies that did fare pretty well amid this headline because they when we first heard about this tariff, LZB, Lazy Boy, MLKN, also AMWD were three stocks that when we first heard about this headline did well because they are exporting a lot less and also getting a lot more of their materials from within the United States. So again, RHW, WSM today amid this delay should be doing more favorable. LZB, MLKN, AMWD to name just six.
And those would be unfavorable.
Because those would be unfavorable. Exactly. Yeah. Yep.
So this headline, because it's delaying those tariffs, helps a stock like RH because they're importing, product there, obviously. And also W is another big importer of these products. And if the tariffs are delayed, it's good for them. So if you're wondering why RH is ripping here this morning, it is off this headline. It is up 4%. W, which is Wayfair, is also trading up 2.78%. A little more muted response from Williams-Sonoma, but up 1.4%. And Lazy Boy hasn't moved, but I'd be cautious being long in this because this headline that actually bumped up on it before. So it could be, just sort of sneaky. It hasn't even traded this morning, so nobody's thinking about it. But, nobody wants to short stocks when the stocks are going straight up. They want to buy stocks. So that's the way this market works. It's rigged to the upside. Here we go. Stocks,
a little bit of different. I just want to point out the stocks have acted a little bit differently, right? Because this happened in September, early September. So you see that, what happens here. This is when they're announced right here. Boom. So this had a significant sell-off and came down, but did come back. Going to RH was pretty pronounced, right? When this
Yes.
happened.
Yes.
RH, this
I think it fell
happened.
10% that day.
Yeah. RH, you could see what happened. September, right? RH, no, got too many symbols in there. RH right here.
There you
This
go.
was in September, right here. This is when
Yeah.
it's announced. We had to go down, but we had a little bit different in Wayfair. Now, I don't know what the difference with Wayfair is than these other stocks, but Wayfair, it actually turned out to be a buy the dip opportunity. This is when it was announced in Wayfair, right? Came back
Yeah.
down. You had the announcement, you had the dip, but they bought the dip. So maybe this had to be an earnings report right here, right?
I think it was. And remember, these companies have a reaction initially to this, and then they're still trading their own company fundamentals. So it's not like they need to move the exact same way. They're, a lot of people would argue Wayfair and RH aren't even that similar of companies. I mean, they just sell some of these overlapping products that were getting tariffs. Like I'd always pair W a little bit more with, your online retailers there because they sell so much stuff online as opposed to RH, which is a furniture store. So, but when you're upholstery, you're taxing, you're tariffing, the stuff that both these companies sell, they're going to move together on that headline. So what do you think going forward here? Wayfair, RH popping on this.
I mean, just for the short
get the hell out.
Yeah, I memean, just for the short term, they're big moves and a shorter period of time. I'd see if if you get some confluence with the a daily high or something. I mean, what you got room maybe up to the 50-day and 193.80. It all depends on what your perspective. I mean, if you took these, some of these stocks home as as a day trade and you're looking for, a pop and some options or something, this is a pretty good opportunity. But if you're a longer term holder, I mean, you cleared the 200, you're attempting to clear the 50. This is a stock we know that did not have a good performance last year, right? So if you're talking about laggards to leaders, this was certainly a laggard. April low, you got back down to that April low at the end of the year. So it all depends on your time perspective. As far as shorting it, I would have to see a pretty good, if the opportunity to short it comes off the open, if it coincides with a good level. But you can apply those to the other stocks as well.
Okay. So that's your major headline here of the day. Let's start thinking about 2026, though. Like, let's start going in here and starting to think about 2026. 2025 was a good year. I had a great year. I was up 38% my trading account, which was nice, obviously. S&Ps, I believe, were up about 17.5. So I did double the S&P, which is good. If you're interested in those trades, that's a lot of the stuff that we do in the STN room. We're overlapping. I'm doing short-term trading. So this 38% is not my long-term account. I have two separate accounts. I have an investing account, which usually tracks the S&P because it's diversified. It's got a whole bunch of stuff. Like I hadn't even looked at it. Somebody asked, and I was actually up 16.5% my investing account. So kind of even. And I've always said, I'm an average investor. I'm diversified. I'm a little bit more conservative because I have a lot of cash in there. So that underperforms. But then, I do obviously some beta in there too, which makes up for it. But this is my trading account. This is my bread and butter. This is what I do every day. This is my work. So, I was up 38.74%. So it was a pretty good year. My acronym for last year was FADE, FADE. And I'm going to start, Joel, because I'm already into it. So I might as well
that's
start.
What we said. Oh,
so,
that's fine.
So FADE was my acronym for last year. And what I was saying is I thought the year was kind of going to be a lot of chop. I thought we could even get the potential where we have a sell-off, a rally, sell-off, a rally. I just thought we were going to chop around. It was going to be a contrarian year. It kind of happened like that. We had the significant sell-off, obviously, from January to April. And then it was more of a check mark, though. And then, we had the big rally towards, the last half of the year where we rallied up. And then the last couple of months, we faded a bit again. So there was no F in my fade. The fade was simply fade. I said contrarian strategies, selling rips and buying dips was the overall, approach to the year, which worked pretty well. That's kind of my 38% right there. That worked pretty well. Now, the A in my fade was AMD. That stock almost doubled last year, so that was a great one. I'm still long AMD. I lightened it up a little bit. I think I sold half, but I'm still in the majority of the position. Dell was the D. Dell was doing well and then sold off towards the end of the year. I think ended up slightly higher than it started, but not much. And the E was Etsy. That was also doing well. I actually sold it and I just recently rebought it. So Etsy was good as well. It's hard doing these things though. Like when you look at it, Joel, like you were saying,
Yep.
give us a pick in January and tell us where it's going to be in December. Nobody knows that. This is why this is just like kind of fun, because nobody knows where a stock is going a year from now. We know nothing. I like what David Prince, a good friend of ours at T3, who comes on the show, he said, if you have somebody saying that they absolutely know something, he says, stop listening to those people and unfollow them, because nobody knows anything. If they are so confident 100% that they know, stop listening to them, because they don't know. So, but what we can do is, obviously as traders, we live in the probabilities. It's fun to pick stocks for the whole year. So let's go. Let's jump into it. I want you to show a screenshot, Joel, or Brentster, because I'm going to give you a hint here. Brentster's going to bring it up here right now at my acronym. And it's going to be a lot to do with this picture here, which Brent is going to show right now. Here it comes. This is what I'm looking at outside, my driveway here. So this is what is happening here. We got 2 already. And I look at this and I'm like, I think, brr, cold, brr. So my acronym, you can take it down now. So we were just previewing that, is BRRR, brr, because I'm in the Georgian Bay cold north here. I used to live down in Windsor where it was nice and warm all the time. Not anymore.
Oh, just
it's
toasty.
Yeah. Here. You don't even know what
tropical
is.
Windsor.
So, okay. And now I've already been screwed by the market because nobody will believe this. But the B, maybe the STN room, because I hinted. I said it's going to be a China stock. And it's starting with B, which you kind of guessed it, or you were saying. Actually, it was Phil guessed it. Phil guessed my acronym in the room. But I didn't reveal all the stocks. I had lots of R stocks. I actually had 6 R stocks. But I had 1 B stock, and I own it in the long-term account, so I'm happy it's up today. But I'm like, I would have been happier if I would have revealed this on Wednesday, and it's not up 10% today. So it sucks that it's up 10% today, but it is indeed Baidu. BIDU. It was the B in my acronym. I wish I would have got this, guys, to you Wednesday, because you'd be like, wow. So Baidu proposes a spinoff of AI chip unit Conluxin on the Hong Kong exchange. That is the news for today on Baidu. It's popping big time. If you've been listening to this show, I've been bullish Baidu for a while. I've been in it since 90. I sold a piece. I rebought a piece, but I've been pretty heavy in Baidu here for the better part of a year and a half. I was early on it, because I picked this up, I think, in mid-2024, and the stock went down like to 75. And I'm like, still long term. I'm like, this company's trading it was trading 9 times earnings at the time. It's working on everything AI, from robotics to self-driving cars, to technology to chips. I mean, stuff is all over AI. Could you pick Baba in here too and say similar stuff? Yeah, if you want to do a B, you could probably do Baba as well. But I was going with Baidu, BIDU. The stock's already up 10%. So if you're in it, congrats, but it kind of sucks that I wish it would have been up 10% tomorrow just for my acronym. Not that I was buying it today. I've been long it for a year and a half. But I think this stock continues to perform. The valuation is about 12 to 13 times earnings here now, but they're operating and they're kicking butt over there. So I said before, if Baidu was a company that was North America, it'd be a $250 stock. But the geopolitical risk for all China stocks keeps a lid on it. So that's my first one, was Baidu. The second one was given to us by our own Michael Pachter in the STN room on Wednesday. Wow. And we asked him about this. I was already looking to pick it up, and he's been talking about this stock before, and it is Roblox, RBLX. Woo! Stock's up slightly here this morning, not up 10%, but moving higher here. And can you hear me?
Yes.
Yep.
Yeah, no, you're good.
He said a whole pile of stuff there in the interview, but I was just like, when he started talking, he's like, you're like, do you have an opinion here? Because we know he covers it. He's bullish. Do you have an opinion on the recent? You asked him, do you have an opinion on the recent pullback in Roblox? And he says, yes, I definitely do. And he said he thinks they're going to kill it over the 4th quarter here. So when their results are announced, and Brentster, can you dig in when Roblox announced this results?
February 5th.
Quarter?
Yep.
February 5th.
February 5th.
Yep.
So we got a full month here yet. But Michael Pachter is saying the numbers, the metrics, he's like, they were light, the guidance before. He says they're going to kill it. So he firmly believes that this stock, he thinks it's going to go up. He said this on our STN. Now, again, it's just an opinion, but he thinks it could pop as much as 25% on the earnings release. I like the pullback in it. Like we pulled back. I like the idea of a January effect here We're leaders to laggards, laggards to leaders. I also like this stock. When Michael Pachter gave it to us at 50, I watched it go to 150, and now it's pulled back. So you know how I love buying my dips. I don't give a crap. It's through the is it through the 200-day? I guess maybe it's not even through the 200
the 200 days. Wait, yeah.
But the 50-day, you know how much I care about averages. I don't care. So contrarian investor that I am, Roblox, nice dip from the high. So I put RBLX as one of the R's. There's 3 R's. One of the R's in my acronym. So far I have Baidu and Roblox. Third,
Dennis, can I just say, is this okay to say? Dennis literally put the alert out while the Michael Pachter interview was happening. He was so convicted.
I bought it during his interview.
Pachter was so convicted, and Dennis was so convicted. Pachter was speaking with like a voice of steel. He was just like, it was one of the most convicted like analyst sell side commentaries I've heard.
I just want to say he's director of strategic planning there.
Yes, thank you.
He still follows these individual stocks, but he's not on the Wedbush research team. So I just wanted to clarify that
for compliance reasons.
Okay.
Yeah.
So the third R, and I was looking at these ones too, and I'm like, man, I have a lot of R's. I could put like 10 R's in here. I like a lot of R stocks. I like a rich tech robotics. This is not going to be in the acronym, but I kind of like that right now. But it's so small and speculative that I'm not going to put it. It's just not my style. But this is, we talk about physical AI. I thought about putting this one. I thought about putting RTX because Raytheon, I think, has just been a monster company going up. I still think, with where we are with the landscape, Trump changing from Department of Defense to Department of War, I think there's a place to own war stocks. And I bullish a lot of stocks. So I was looking at this. Then I looked, and I even thought about doing Rivian. And I'm long Rivian in the long-term account. I think Rivian's going to be a big play. But I ended up going with, which one I ended up going with, and I own this as well, is Rocket, RKT. And the reason is I believe interest rates are going to drop significantly in the second half of 2026. If this was a 6-month acronym, I would have went with Rivian. But it's not a 6-month acronym. It's a year acronym. And I'm like, the second half, I really firmly believe that interest rates are going to go down significantly. So my last 2 R's are going to be very much based on lower interest rates. Company that benefits tremendously from lower rates is Rocket. Everybody refinances when interest rates start going down. So I think RKT is my play for lower interest rates in the second half of 2026. I'm long Rocket right now, full disclosure. I'm long all 3 of these stocks I just mentioned. I'm long Baidu, I'm long Roblox, I'm long Rocket. The fourth stock, which is not a stock, it's going to be regional banks. Oh. Why regional banks as the fourth R? And you can pick whatever regional bank you want. But I'm just saying overall, if you want to just do KRE, which is K, but it doesn't make sense. But it's regional banks overall is the R. And the reason, again, is the same thing. If interest rates start actually going down the second half, it's going to benefit regional banks tremendously here. You could pick like RF if you wanted to do an R. You could pick Fifth Third. You could pick, all these ones. Just go to the KRE ETF list. But that's the fourth R in my acronym here. So I'm leaving you 10 minutes for yours, Joel, but just to repeat, I have Baidu, Roblox, Rocket, and regional banks with an honorable mention to Rivian, which almost made the cut but did not.
Okay.
There we go. Burr.
Way to be, Triple D.
Burr.
Like it. Joel, how are you feeling after that? Now you have to follow
tough
that
competition. Up. We have one overlap. What's
the overlaps?
Well, show my acronym.
Okay, one sec. I wasn't ready. Hold on. I gotta get ready.
Okay, here it comes.
Okay. Share
and this
screen.
pick into 2026 is so tough. Like going.
It is because I'll just preface. Wait, before you show this, if I could have covered all my stuff in April.
Oh, I like that.
If I could have covered Palantir,
in April,
yeah, UAL, and then NTRA in April, boom, and then the only freaking one I own, Costco, went down. The only one, and then one of my largest positions. So, whatever.
So Joel's acronym for last year was PUNC, P-U-N-C,
yep.
And it was all short. He said short them all. Short Palantir, UAL, NTRA, and Costco. He was right on Costco. He's wrong on the other three.
Exactly.
But he was right in April. He was up so much. Like he went
Yes.
from January to April. If it was a
That-
3-month acronym, he would have
yes.
killed it because stocks went straight down
Yes.
from January to April.
And
And
this
then,
is
they
all, you're
obviously
all
passed
fitting
off.
into my perfect theme. Okay, go ahead, Brent, show.
So his acronym for 2026.
Drum roll,
which looks like
please.
fun. Drum roll. Rolo. I like it. Rolo.
Yes.
We come up with such better names than the Fast Money group there. Sorry. We shouldn't say that because Tim Seymour comes on our show. But they were like, actually, Tim's was good. So, but a few of them on there were like Karen Feinerman was like, she didn't even have like the letters didn't match and stuff. I was like, it was weird. So, Karen, do a better job this year.
Okay.
We got Rolo.
So let me tell you, we do have the overlap with Roblox. And on the
you did Roblox too.
Wow.
This one, I'm not. Well, no, because man, if I would have listened to Michael Pachter on App Lovin', or I mean, you bought that bank account. I mean, he's made so many good calls.
Some bad ones in there too.
There's some bad ones in there too. But and this one I might not hold the whole year. This one I will look at it technically. Usually when I put something in, these all went in the long-term portfolio on Friday. So
did you buy them?
They're all in it.
Wow.
Yep.
Conviction.
Yeah, there's only 3 stocks.
We all own, except I don't own the regional banks yet. I don't own any regional banks.
No.
Execute that in a bet.
Cool.
And thank God I didn't short my acronym for last year. Okay.
Just shorting long-term sucks.
Exactly.
That's the lesson.
Exactly.
Long-term shorting is so hard.
And there was another reason why this was extremely hard for me to do this year. I don't want to say I'm bearish. I'm saying I'm cautious. Okay. But I'm still going to put some stocks in here. The stocks that I'm going to show you, it's more of like, I'm really cheering for these stocks because that means the market's doing good and, we're not going to, whatever, right? We're not going to have a bear market. Second one, I've been looking at Oracle forever. Don't have much exposure to tech, some exposure. I think the big boys are stepping up here, 180, 190. I think it got way overdone when it got to the 340. I liked what Tim Seymour said. It still trades a little bit too high a PE. So I went into it. I am prepared if it goes lower to buy more. I am prepared, but I'm in it. So that's Oracle. Okay. So that is my it's okay. Because if the Oracle comes out, then I think the AI trade is okay. And that's what a lot of markets predicated on.
Sure.
So that's a little bit of, wishful thinking. The last one is the super most boring stock. It's also tied to interest rates. It's a value stock. It looks absolutely horrible on the chart, and it's Lennar.
Ooh, I like this.
Yeah.
Joel, I like it.
Yeah.
I like your acronym. I might go buy your stocks. Well, actually,
I wouldn't. You should probably short them all based on what happened last year. Now
I love it. I know I love it.
Now my O, you guys are. It's a word, and it's outlier, and I feel that this market is very fragile, and we can never see events that are going to happen during the year, right? We don't know what's going to happen with wars. We don't know what's going to happen with tariffs. We don't know what's going to happen with inflation. So there's always going to be that outlier, okay? And so those are the things I added. Reviewed my long-term portfolios. Very happy with the performance. Not doing anything to those. Not throwing on any super hedges or anything, but just an outlier. What it is, we don't know. But I'm telling you, if you're looking for a rah-rah year, could be totally wrong. If you're looking for, 6,900 to 7,200 or 7,500, 7,800, which I hope it does, then fine. But it's just a precarious market, a lot of things going on, a lot of unresolved issues. Interest rates, going up in the second half of the year. But that's it. I'm locked. I'm loaded on those stocks. And that's my acronym. So We'll see what
Fun.
happens.
Rolo, that
Bravo.
was great.
Bravo.
That was great. I think the geopolitical risk, that is what I'm going to say is going to be the number one outlier. And it's everywhere. We don't know this whole Department of War, the Venezuela situation, the Ukraine continuation, and then there's a whole pile of Chinese ships doing testing around Taiwan right now. I mean, the geopolitical risk is real here. And I think that is the biggest outlier risk for this market. So I'll just, color you up a little bit there with your outlier commentary. And we just got Rivian numbers. Which was the R that I was going to put in my portfolio, but I am long Rivian, full disclosure. They delivered 9,745 Q4 deliveries, 42,247 vehicles for the full year. Stock not doing much, going up just slightly on these numbers here. So just kind of hanging out. We'll show our charts here again. We'll bring the charts back up here, Brunster, so you can see the action in Rivian here, which is just, kind of chilling on these numbers. I don't see it doing too much, actually. We're going to continue to get numbers this morning. We already got XPEV, had their numbers overnight. NEO had their numbers overnight. Both those stocks trading higher. We're going to get, I believe, Ford and GM, and Tesla will come out here soon as well. We got some Tesla numbers already here this morning. We know for you Tesla traders out there, registrations, sales dropped 44% in Spain, but they were down in France, but they were up in Norway big time. So a little bit of mixed results coming from Europe for Tesla numbers here this morning, but we are waiting here on the US numbers, which will be coming up here usually after 9 o'clock. Looking at other acronyms, and CC Legator here in the background here. He's going to be here in 1 second, but I've just got a kick out of this one. We'll show it here on the screen. Annie saying STN for the win. Acronyms: SYM, Tesla, and Netflix. I own SYM. I own Tesla. Netflix I don't own, but I could get talked into it. So I like that acronym there too. So SYM, obviously a huge robotics play. Tesla, robotics as well. Valuation's crazy expensive. I think you could maybe get a pullback early in the year, but I do think there's still a lot of action here to the upside for Tesla in the future. So
yeah,
still like it long term.
It's on YouTube. We did put Michael Pack there. If you want to drill down into the WBD PSKY Netflix triangle, he did a great job with it, analyzing it, and you can see what his analysis. But that's it, man. Let's keep the show going here with our favorite options analyst. CC Legator, AI. Here we are, another year. CC, we survived. How you doing today?
Good. Great show so far, by the way.
Yeah?
Like the acronyms and all. I was it's sort of weird because Joel mentioned, or Dennis mentioned this earlier. It's like it's such a weird week where we had the end of the year, midweek, and then today feels like a Monday, but it's actually a Friday.
Yeah.
So I was like, and we did the show Wednesday. I was like, what am I going to talk about Friday? We just said everything and then it was closed. But then now you've given me all these tickers. I kind of want to get all into it right away.
Okay. Before you do that, I just want to add that CC was on Wednesday, and I know it's super early out there for him. He's out there in Colorado, but he is a frequent listener to the show. And now, when we do setups, when we talk about shorten Micron, he's gonna, in the background, he's gonna pop on and say, hey, I got this idea. I got this strategy. So CC Legator gonna be a big part pre-market prep 2026. So just wanted to give that heads up to the listening audience.
Oh yeah. And Joel, just to be clear on your acronyms, those were longs, not shorts this year.
That's Joel. Yeah. He throwing all those shorts at you.
Yeah.
No, but really, Oracle was a long, right?
Yeah.
Okay. It's funny. I have an Oracle trade expiring today. So I have, what's the trade in pre-market?
It's up. We're up $3.22.
Is it near 200 yet?
Not getting close to it. You think we're
okay? That's what I have a butterfly for it to pin at 200.
Oh, nice. You're getting sucked up to it too.
Nice. Okay. So
Talk about that trade. So explain that, because we have some newer traders. We obviously have a lot of seasoned traders. Maybe they don't know exactly how we know what a butterfly is. Can you explain that for us quickly?
Yeah. So basically what you want to do here is, and this was something I put on about a week and a half ago, I think, maybe even longer actually. And it was when you got this bounce back up to like 190 heading into year end. What day am I looking at here? It's about, like this was right before the Christmas week. And I was like, oh, this thing is going to have a tendency to creep back up towards 200 by year end, which is literally this gap right here that we're looking at on the chart.
Mm-hmm.
And so what a butterfly does, and I can just do one real quick. So I had mine was wider. It was basically like a 190, 200, 210 butterfly. And what that is, but we can do one for today just to show. So this will be so this is a 195, 200, 205 butterfly. And I'll just zoom in real quick. So what this is doing is you are buying the 195 call, in this case that we're looking at right now. You are selling 2 of the 200 calls, and then you're buying 1 of the 205 calls. And what that does is you're basically creating a profitable zone from which, in this case, if you did this trade right now, you can't, but your break evens would be 196.20 and 203.80. And you make money anywhere in between those 2 points. You lose money if this rips to 205 today, and you lose money if it goes, you lose everything if it finishes down below 195 today. And you make your max gain right at 200. So in this case, if you got a pin at 200 today, you would be risking 120 to make 380. And the trade I'm in is like the 190, 200, 210, which is, I think I originally put it on for like $1.80 or something. So I'm basically risking $2 to make up to $8.
Do you try, like, if it gets up to 200, like right off the open, do you try and work out of it? Is this something where you just set it and forget it? Do you leg out of it? How do you approach it?
It's interesting. So I'll be watching the action, and if it looks like, and then I'll also look, and I haven't actually looked at this in a couple of days with the holiday. If the 200 strike is super loaded today with expiring, calls, and basically people have sold calls, then I will let it run and try to squeeze as much out of it as possible, because the tendency for it to do is it would gap higher, run higher to 200, and then just kind of flatline into the close. If that's not the case and it looks like it's going to be volatile and maybe sellers come in right after the open on the entire market, then yeah, I would just close it. And the way I like to think on those trades is at that point, so this is a trade that starts directionally. Once you've gotten your move and it's into your profitable zone, it's actually as if you're short premium. And the longer you can hold on to the trade, the more money you're going to make, right? So at this point, if on that, let's say that 195, 200, 205 that we just discussed, if you got to move to 200 on the open and you bought that thing for 120 and it's now trading, I don't know, 350 or whatever. And so you still have $1.50 that you can make throughout the day if Oracle sits right at that 200 level, and you just wait. And any move away from 200 is costing you that max gain potential. So if it finishes at 201, that thing you paid 120 for, or whatever we priced it at, is worth 4. If it finishes at 200, it's worth 5. If it finishes at 202, it's worth 3. So, and then the same thing to the downside of that 200 strike. If it finishes at 199, it's worth 4. 198, it's worth 3. So it's basically it's as if you're doing a gambling on a football game, and you exact price, and you get absolutely paid if it hits that exact score. And anything close to that score, you get paid, but a little bit less. And the farther away from that score, the less you make. And then eventually, if you said the over-under was going to be exactly 55 and the game was 85, you lose money because you're so far off. So that's the best way to think about that. Was that too nerdy? I don't know. I think that was good.
That was great. It was great, CC. So
Yeah.
so let's talk about that's great finishing trade for 2025. Let's talk about 2026. I mean, you know, obviously we were just trying to do an acronym for the whole year, which is nearly impossible. So we won't make you go out that far and try to do a full year. But let's just go out and look to January. You know, what are you looking at, you know, in the January expiration, which is about 3 weeks from now here. So the 20th, be on the 16th, actually only 2 weeks. We got an early expiration here in 2 weeks. Do you see any trade setups here early? Thoughts, you know, because obviously we also are in a new year, so now we have a little bit of the January effect here as well. I'm not sure how much seasonality plays into your trades here, but just talk about, you know, the next couple of weeks. What do you see?
Yeah, so something significant happened with, you know, like on New Year's Eve, and that was basically a ton of year-end option positioning expired and was rolled. And we had been talking about this for some time, going back a couple of months. So you could argue that everything we just went through all fall, which seemed very volatile, was just one big, large consolidation, right? And if you look at like this September move, you know, where we got to new highs and then we had like the volatility sort of kicked off right here in like early October. Let me zoom in even more. Every time we made this move up to above 6,900 in the SPX, the market, you know, it didn't take much like to get spooked. There was some story and it like kind of sent it lower and everything. And like that was really all this volatility, you know, all the Fed speak, all the, you know, whatever the news was that kept sending the market down 6%. In the options market in the background, and we were talking about this on the show this whole time, you know, not to pat ourselves on the back, but like going back to like Halloween, there was a massive year-end positioning at and just below the 7,000 level in SPX. And I didn't know exactly where we were going to finish the year, but I had a feeling it was going to be up near there with a almost near certainty that we weren't going to get above that level into year-end. Right. So that's a long-winded intro into saying that all of that option stuff that was packed at year end up near 7,000. And it also corresponded with where a lot of like, you know, the Wall Street banks year end price targets and all were. All of that's gone now. Right. And so today's action is kind of interesting to me because Wednesday felt awful, I would say. Did you guys see like the sort of breadth of that sell-off, right?
It was everything.
Everything. Like every sector was red. You know, like you look at like I always just like have the Mag 7 plus Broadcom as a cheat sheet on my screen. Like they were all lower. So it felt really bad. Like, oh man, is this more than just a year-end thing?
Yeah.
So with today's, you know, action that we're going to gap higher, and if it held and we were like, it was like, oh, that was tax selling, or, you know, like what you were saying earlier, Dennis.
Sure.
There's nothing stopping the market now from going higher, at least from the options perspective. There's nothing left at 7,000. It's all been rolled out 3 months. It will start to reaccumulate, like depending on what the market does over the next couple of weeks. But there's nothing stopping it from going higher. And there's been a massive thing stopping it from going higher the last 3 months.
This is awesome to know. Like this right here is a conversation where I always say, you know, I'm mainly a stock trader, but just knowing that options action, how you put up these little walls because there's just so much premium, you know, at these levels here are so many options, you know, action at this action just helps you as an equities trader as well. Because you just telling me that, even if I never traded options in my life, and I'm just trading stocks, just knowing that after, you know, the year end here, stuff starts to open up a bit, or after a big expiration stuff starts to open up a bit, it's so valuable because you know, this is what it's all about, is like there's little blocks of like, you know, options action that basically stop stocks from going higher, or stop them from going lower, just for the simple reason that they like to go pin, like you say in the Oracle 200.
Yes.
So I just wanted to like interrupt and to say, you know, that the information right there, that statement in itself, you know, to say that, you know, now we don't have this roadblock over ahead, so maybe be careful with a few of these shorts, is valuable information. So now I'll let you continue, but I just want
and it's funny. It's funny you just introduced Oracle into that conversation. So look at this, you know, basically since this is going back, this bounce higher in, you know, right before Christmas. Like, look at how perfect this is. Now, I know this actually also corresponds with, you know, technical, you know, like this, if you were looking at this gap and everything, but options often do. I'm like, this is a 200 level. When Oracle got this low down into the 170s and people were buying stock, as soon as they get their bounce, what strike, what call are they selling? They're selling the 200 call, right? That's their price target. It's a big round number. They've gotten it. And, you know, I'm talking about hedge funds. I'm talking about, you know, it's like, all right, we bought the stock at 177. This is like a 2 to 3 week play for a bounce. What call are we selling? And they're turning to their options guy and he goes, just sell the 200 call, right? And so that's what's happening here is like you see this go up to 200, go up to 200, go up to 200, keep failing. Today it's going to make another run. And then what I would say is with today is Friday, right? With today being Friday, you know, a lot of this 200, and actually let's just look while we're on. I said I was going to look at this eventually. So yeah, like look at this, 11,000 200 calls in Oracle today. And you look at like every other strike near it, you know, like 2,000, 4,000.
It stands out.
Yeah, it just stands out, right? And so what this is everybody that I just mentioned. This is everybody sold that call. And so Citadel is sitting there with a ton of gamma on the 200 line. And every time the stock goes up, like hopefully it does go up to 200 today for my own trade, it's going to get up to 200 and you're going to see sellers, you know, come in. And if you sat here, where is it right now? Pre-market like 198.
Could you explain that a little bit more with the gamma? Because they're short the calls.
So Citadel's long the call. So everybody, you know, like, you know, at hedge funds have, you know, bought Oracle. They've sold the 200 call, right?
Okay.
So Citadel and Jane Street and all the market makers, and that's my old job. So what would happen here is I'm long that 200 call. And let's say Oracle, I doubt, I mean, that'd be, no, I could do it, right? It could go up to 200 today, depending on how we open. If it got up to 200 and I'm on the other side of that, those 11,000, I own those 11,000 calls. Every time it gets to 200 and goes to 225 cents, I now have tens of thousands of shares to sell to keep delta neutral, right? Yep. And if it does go up to that strike and I sell those shares, and then it goes back down to say 199, like it goes up to 200 and then goes back to 199. You're like, that was it. It's going to keep going lower. It's not going lower because me in my old job, I'm buying those 15,000 shares back at that level, right? So I sold them above 200. I'm a buyer below. And what happens is that starts to pin a stock and it starts to really kind of like dampen its volatility. And you see that especially on Fridays. You see that especially on monthly expirations. In the indices, you see it. I think a lot of last week of us sitting, like, did you notice how often we were just sat at the 6,900 level last week? I think a lot of that was just sort of year-end options right on that 6,900 level. So anyway, that's what's happening in the background. That's what's happening at Citadel. And we would have, you know, it's all automated at this point, but we would have basically a computer program that you could set the width of how aggressive of a seller you wanted to be if, you know, Oracle stock got to 200.
And the people that sold the calls, they don't care, right? They're long the stock. They sold the calls a hedge, and they're like, well, you know, I'll get, you know, they might have sold it for $5.
Yeah.
So they might, you know, they might be covered all the way up to 205, right, on something like that. So they're not.
And they're just sitting there watching, you know. So these closed on Wednesday at 30 cents. Let's say they open it. They're not going to open up that much more. They'll probably be about the same price. You know, if you're short 1,000 of those, that's a lot of money for that 30 cents just to watch it all day come in. And so you're watching your Oracle long go higher, and you're watching your 200 call short get lower, which is profitable to you if you're at the hedge fund. So yeah, so it is a, and the reason it pins is because everybody, so I'm at Citadel, let's say, and I know this dude I go out for drinks with on Friday is at Jane Street, And we both have the same position. We know we're in the same position in that, you know, Steve Cohen has sold us like 10,000 Oracle 200 calls. So I'm trying to get in front of him. So if you're the market maker, you want it to travel as far as possible before you do your sales and your buys, because you want to, you know, you want to be scalping $1.50 in every direction. Well, my buddy at the other place also knows that. And everybody's jumping in front of each other to try to get their sales, their stock sales in and their buy sales in. And it gets tighter and tighter and tighter until at the end of the day, you can see, like on a Friday in particular, if Oracle or any stock were to be right at a big strike like that, you'll literally watch it go up and down like by like 8-cent increments. And it's basically everybody trying to beat each other to those sales and buys. And they're trying to make up for the fact that they're losing money on all that premium that's collapsing. And the only way to make up for that is by scalping the stock.
CC, Jay asking, is this your go-to indicator, like open interest, when you're looking at doing the butterflies? Like, is this where you start? Like, let's just go through and bring it up and see which level stands out like a sore thumb?
It's not, I would say I would start with technicals. So what was one we were doing? Oh, so Joel, on Wednesday we did, we were looking at SanDisk, right? So we were looking at some short ideas, Dennis, and what's interesting about a stock like this is typically the way stocks work is that when they go higher, vol goes lower, and when they go lower, vol goes higher. And that's how like an index would work. If the market goes lower, the VIX pops, right?
Yeah.
These kinds of stocks, a chart that looks like this, a chart that has gone up 500% since
crazy move.
I mean, since the summer. This works the opposite. This is more like a commodity or something, right? And so in this case, like a meme stock, I think we can consider these Western Digitals and SanDisk some meme
almost to that point,
right? Like, I mean, it's kind of crazy, right?
Yeah.
And this is the opposite, right? So what happens here is if SanDisk and like what, you know, you could look at Western Digital and all, and I think you all were talking about Micron the other day, which to a lesser extent, you know, like looks like that. I guess it kind of does look like that.
They all do.
So what would happen in a Micron is if it corrected, volatility would actually go down, right? Which is the opposite of how normal things happen normally. And so what I would be doing in a situation like this is I would be looking out, and my downside butterfly, normally I would just buy a put or a put spread if this was a normal stock, if this was NVIDIA, let's say. But in a case like this, I know that if this stock actually corrects, volatility is going to compress, because people will be like, all right, it's over. It's no longer going to go up, 500% in, 4 months. The mania has subsided, and it's going to trade a little bit more like a normal stock. And so in a case like this, my first look would be technicals. I would say, all right, so if Western Digital, or we're looking at Micron now, if Micron pulled back to, let's say this, these first, I'm just picking up these lows at about like 225, let's say, then I'm looking at this expected move. And I'm like, when is the options market pricing the chance for Micron to go to 225, right? And in this case, it's not till March, right? Now, if this thing reversed, I think the options market's wrong. I think it could go to 225 a lot quicker than March. But this is now giving me a decent time frame instead of just guessing of what expiration to pick on a Micron short trade. This is giving me a general sense is I probably want to go out to March. Let's just stick with March. And then it's a decision of, the 225 level, or do you want to get really aggressive and you want to come down here closer to 200? 200, you might want to go out to April or something, let's say. But let's stick with March and 225. In that case, it's like, all right, well, now let's look at that options chain and let's see if there's anything significant down there at those levels. And that's at that point, I would starting to be looking at like the open interest and all. And I think I would take it more into account because it's not going to be a big deal with a trade out until March yet, because it's the gamma matters the closer you get to expiration.
Sure.
If we got down to say 225 on a butterfly trade that was targeting 225, I would be absolutely staring at that 225 open interest, and I would be hoping that it was like building up and it was significant. And that would be my confidence to stay into the trade till the end. And so that's what I think that's probably, it gives me confidence. And because there is something on my side helping me in the background of the market.
Okay, CC, great
Yeah.
content here to first day of the year. Really enjoyed it. Deep dive into this. Okay, one more. What do you got for me?
One question in there. How often is open interest updated? Super annoying. It's not till the next morning.
Oh, wow.
So it's not like, there are some services that do live SPX, like open interest intraday and everything like that, but it's super annoying. You basically have to wait till the next morning on the option.
Okay, thank you. Yep. CC Legator, Options AI. Going to see a lot of CC in 2026. Thanks.
Nice. See you guys.
Awesome. Thanks, CC.
Okay, here we are in the final few minutes of this first day of 2026.
And let's say thank you to our wonderful sponsor, Hive Digital Technologies. Got the overlay on screen right now. There is a QR code in the bottom right corner. I'm going to tell you a little bit more about Hive, but if you want to go learn more on your own, scan that QR code. There's also a link in the description of this YouTube video. Hive Digital Technologies, industry-leading expertise in building, maintaining, and operating efficient digital infrastructure, geographically diversified operations situated in politically stable jurisdictions like Canada, Sweden, and Paraguay, significantly expanding global footprint with a path to 25 exahash per second and aiming to capture 3% of the world's Bitcoin production this year. Oh my gosh, I can't say that in a year, because we're in 2026
next year.
Oh my gosh. So I would bet that Hive did hit their 3% world global Bitcoin production in 2025. We have not yet heard from Hive to confirm this, but I bet we'll be getting some kind of confirmation from the company shortly on that. Want to say thanks again to our favorite sponsor for 2025, Hive Digital Technologies.
I mean, Bitcoin winter has been here. Obviously not good for companies like Hive and Mara and Riot as Bitcoin has come down in price here. The question is, we have a turn of the calendar and things change in the turn of the calendar. And we talk about the January effect. Bitcoin was definitely a laggard in 2025. Could it be a leader in 2026? I'm betting that way because I'm still long Bitcoin and holding in my long-term account. So if you look at IBIT, we put in this hard bottom and going sideways here forever, 46.68. We're up here this morning. We are seeing the laggards show a lot of strength here this morning, but we're seeing everything show strength. So let's talk the January effect here for 2 minutes here. Cool. My January effect is leaders to laggards, laggards to leaders for the first couple of weeks of January. We are not seeing the leaders lag. We're seeing everything rally here today. But let's see what happens after the open, after 9:30, and institutional money comes in. Is there profit taking? I actually think the setup is pretty clean. Usually, on the short side, it's always dicey, but it feels cleaner here today. With 2 reasons. One is we have the turn of the calendar. I think there will be some institutional money managers coming in and taking potentially some profits here in just after 9:30. And then 2 is we had the deep sell-off there on Friday. Do we, have that bounce back, or we bounced back here this morning already? Is, there's some happy sellers. Maybe they didn't like the loss on Friday to come in here at the open. I think there's potential for that too. So I will probably be trying to initiate a few shorts off the open. I'll want immediate gratification. What does that mean? If I short the open and then they just start ripping them higher and they won't stop relentlessly, after a few minutes, then you got to say, okay, I'm wrong. The buyers are too strong. But a lot of times, Joel, you taught me this way back in 1999 in the Bray Trading Office. A lot of times, a stock will open with very close to its high or low of the day. Not all the time, but there's statistics out there that show you, you have an opening and it's an event. It's a big liquidity event where you have big buyers and big sellers in. Well, sometimes the stock opens too high. Sometimes the stock opens too low. Sometimes stocks overall open too high or too low. So taking that shot on the open and saying, I think there's the potential that the stocks could open near their high of the day isn't a bad play. Or maybe it's like this. They open, they go up a little bit and then they come back down through the open, Joel, and that's where you strike too. So I mean, maybe we wait for that. Maybe we open, and then if we, maybe we execute a little bit on the open on the short side. If we rally up, then if we come back down through the open, that's where you probably get aggressive on the shorts. But I am looking at today as the potential sell the rip market here, even though I'm bullish for 2026. So I'm not going to marry these shorts here today, but just looking from a scalping perspective, and we'll see if we can see a little bit of weakness after 9:30.
Yeah, you were talking about like the micron and like, what it had on Wednesday, and you're like, well, I don't know if I want to, take it home short over the weekend and get stuffed. And here you are, it's sold off into the close, and now you're right back at Friday's high. 293.17. You did get ridiculous, traded over 296 in the pre-market, but you're opening right into yesterday's high. So if you got caught in that soft, keep an eye. 293. 293.17 was the high. Keep an eye on that potential resistance. Okay, folks, it's great to get things started here in 2026. Going to help you navigate these markets the entire year. Thanks for tuning in to PreMarket.